Welcome back to this funky Friday on Crypto. Oh my God, what the heck is going on with the markets? Well, one thing is for sure. While the prices may not be great, the adoption is happening at a wild clip. It feels like the nihilism is being shaken as more and more things start to unpack in the cryptocurrency industry and the US abroad. Now, when we talk about crypto, blockchain, etc., we've got to pull back to the roots. It's all about sovereignty. It's all about the fundamental freedoms provided by the US, the First Amendment, and of course, our right to privacy, both online and with our finances. One story I've been following and I've been getting a lot of joy out of. It's not crypto related, but it's very adjacent to the core ethos. And this is coming from Preston Byrne, tech and free speech lawyer, head of legal and compliance at Arkham, a research firm on blockchain, managing partner at his own firm, and he has been representing 4chan in this absolutely wild case, which is that the British and their Online Safety Act, this new thing that's been getting people arrested for posting tweets, for posting images of them shooting a gun, things that they don't like, are getting these Brits in all sorts of trouble. And very recently, the Brits, in a wild act of hubris, have sent 4chan a letter of offense saying that they are being sued to take down content. And Preston, representing 4chan, comes out and says 4chan, X, and the United States Congress together will save the world. Why is he saying this? Well, he's leading a campaign. And the reality is that X is also getting enmeshed in all of this drama. Here we have Secretary Marco Rubio saying the European Commission's $140 million fine isn't just an attack on X, it's an attack on all American tech platforms and the American people by foreign governments. The days of censoring Americans are over. And what's happening here is that the Brits, under this new online act, are saying, hey, we want you to remove some of the anonymity and we're going to fine you for it. And they basically made these statements on how they want to treat the internet, and they're trying to export that, but it's not going to happen. And this has just been a blast. They are unleashing the full force of American lawfare upon these people, and it all comes down to this. Look, the Wyoming Granite Act, which is actually kicked off by Preston himself, is this new act coming out of Wyoming. It is not finalized yet, so a lot of its firm details aren't concrete, but it is basically saying, fuck you if you're going to try to come after America, American citizens, American companies, and it creates this protective barrier. It goes even further to say that if you are a company domiciled in Wyoming, and let's recall Wyoming is now competing with Connecticut to have C Corp build under their umbrella. It's now saying, if you are a Wyoming company, we will prevent you from working with these foreign regulators like Ofcom, which is the British Office of Communication, around things like foreign censorship. So this is just super, super fun to follow. Preston has this all put together in a blog, and I do recommend that if this story tickles your fancy, you hop on in here. It opens up with this initial document coming after 4chan. Dear Sir, Madam, please find attached letter regarding the expansion and scope of our existing investigation into 4chan Community Support LLC to include duties to protect children from harmful content under the Online Safety Act of 2023. And this is, again, coming from the Brits at a US LLC, trying to extend the rules that they made, which are pretty aggressive if you guys want to look into these things. And it's just been an absolute blast. After 4chan refused to pay fines to a foreign government, the UK says they're expanding the scope of the investigation. So Preston, as any lawyer would do, puts together a great blog giving you the return dialogue. Last night, Sarah Rogers, the United States Undersecretary of State Public Diplomacy, let it be known on GB News in London that the US is considering introducing a federal version of the Granite Act. They've gone so far as to say that the Granite Act is a legal atomic bomb. This is the beginning of the US looking at everyone else and saying, hey, you run your countries the way you want to, but if you try to bring that shit to our doorstep, we are putting this in law that they will be shielded, and those shields will be made of granite. So this is just an absolute blast for anyone that likes to follow internet degeneracy. I mean, there's nothing worse than 4chan. 4chan is a cesspool of degenerate garbage, but fuck anyone who tries to take that from us, because that is what the internet is built for. And of course, that comes back to blockchain and everything that we believe in self-sovereignty, in the right to the First Amendment, and extending all of that to money and data. Now, to go further on some of the exciting regulatory expansion that's occurring in crypto, I talked about the SEC meeting yesterday, and I actually have a tweet to unpack that. But before we get to that, we have this really fantastic announcement. Stealing this from Shanaka Anselm Pereira, who unpacks this CFTC posting. Breaking: the United States just ended the offshore crypto era, December 4th, 2024. The CFTC has authorized spot Bitcoin and cryptocurrency trading on federally regulated exchanges for the first time in American history. For all of you guys who don't know, all of these ETFs, all of these things that are being traded on the public markets, they're around Bitcoin futures. They don't involve the purchase of Bitcoin itself. This is obviously troubling to a market that wants to see this asset consumed, right? When we see these large traditional finance players accumulating Bitcoin, well, they're not really doing that. They're kind of doing a paper Bitcoin product, and it sucks. This is also why you haven't been able to commit to these products in kind, like commit actual Bitcoin to receive a share of IBIT or something to that effect. He goes on to say, for 15 years, the agency refused to provide regulatory clarity. Americans were forced offshore. They traded on platforms with no customer protections. FTX collapsed. Billions vanished. Retail investors were decimated. That era is over. Cross-margining between spot and derivatives could compress capital requirements by 30 to 50%. This means more money gets into Bitcoin. This is very impactful. 30 to 50% that was being wasted going between these derivative products and real Bitcoin. Institutional barriers dissolve overnight, and this is huge. Pension funds, banks, sovereign wealth. This is where the real money is. And these are the players that are not the BlackRock, IBIT in and outflows. IBIT, sold 600 million of Bitcoin or something. That's smaller players that all hold shares in this ETF that are coming and going. Those are people that are responding to the news daily, and they're getting scared. But you know who doesn't operate like that? Pension funds, banks, and sovereign wealth. They see Bitcoin. They see the debt crisis unfolding, that the U.S. debt just keeps ballooning. And Bitcoin has become one of the answers to this. Obviously, gold is one, but Bitcoin has now broken through that barrier. Stablecoins, tokenization, this all reinforces Bitcoin's store of value. And these pension funds, these banks, these sovereign wealths, they will hold for 10 years. They will hold for 20 years. I happen to know some sovereign wealth funds, and their investment landscape is 50 years into the future. That's because they're countries. They want to establish a strong base. So bringing these players in is massive. When we see these dumps down below 90K, I mean, they could be pushing it down so that they have the opportunity to buy it more often. And we can't treat this lightly. I mean, this post goes into some great prose. The question is no longer whether America leads digital asset markets. The question is how fast capital repositions. 15 years of regulatory ambiguity resolved in one announcement. The new financial architecture has begun. So this is exciting. And this right here is what was so frustrating under Gensler, to watch the US push away this tech that just digitizes finance, that brings everything into the mobile era, to the internet era. Sure, we have our meme coins, we have our NFTs, we have all this crap that didn't work. And that's because this 15 years of regulatory ambiguity meant that real players were kept out. These institutions, these pension funds, they didn't have the risk mitigation that comes through regulation, that comes through laws. That's why these things exist, so that people can't just take your shit and run away. And it's all inverting. So now real businesses can be built, real financial players can enter. And again, they know the deal that they're getting. That's what's happening here. And we pushed it away for so long, and it went to China in the beginning, and then it went to Singapore. And now you have the UAE, the United Arab Emirates, just sucking up so much of this. But those aren't the players that have established long history of good finance. That's for the US, that's for the West. And we want to see the West maintain its dominance if you live here, for sure. And I'm going to move on to one final piece of regulatory news for your Friday. Again, these don't impact price right now, but this allows the industry to move from its nascent, early sort of Wild West into a concrete, real place where real businesses can grow. And Jake Stravinsky, who I've cited many times, one of the most active members of the Blockchain Association in DC, comes out with this nice tweet thread: market structure bill December update. The Senate's working very hard to get this done, but the closer they get, the more complex it becomes. Reminder: market structure regulation may be the most important crypto policy objective, period. It would clarify which tokens are non-securities, how centralized platforms are regulated, and more. Done right, it protects crypto from Gensler 2.0 regime in 2029 or beyond. That is what we want. One of the comedies is that baked into this would be preventions for the president and his family to engage in crypto-operated businesses. So if the Dems had not gone the Gensler route of trying to kill everything, well, we wouldn't have the Trump grift. But, Good on Trump for taking advantage of this opportunity. He's killing two birds with one stone. So the House has already passed their version of the bill. This is the Clarity Act. Great. We want to see it coming to the Senate. In the Senate, banking is working on one half of the bill, securities law, while agriculture works on the other half, commodities. Both committees published drafts this fall next. So this brings us to three big remaining disputes. First, stablecoin yield. In the Genius Act, I've talked about this before. The Genius Act says that you cannot take a dollar, put it into a T-bill, and share that yield with the person who gave you a dollar. This means great business for any one of these stablecoin issuers like Tether, like Circle, which really their revenue flows to Coinbase. So if you want that, buy the stock coin. But the banks got really salty after Genius passed because Coinbase turns around and they say, oh, it's not yield, it's rewards. And there were a variety of ways, as I have discussed. We've seen the American Banking Association say, hey, good yield being delivered in other places that are not banks, well, that reduces our deposits, which means we can't loan. And they're saying that that will destroy the fabric of American society. But again, guys, just use Aave. You can take these assets and you can use decentralized finance, and it doesn't care who you are, what gender you are, what race you are. This is the point of blockchain. So it's happening here. We're getting the real business connectivity into all of that infrastructure that we've been building for the past 15 years. And Aave is turning into this amazing product. I actually talked to them earlier today, which is why I'm purple in the background. I think that Aave alone, connectivity to that, can turn anyone with active users into a neobank. So this is obviously very scary to the bankers. So yield is something that they want to cover. The banks want to secure that. But as I always say, just because the issuers can't deliver yield doesn't mean the protocols can't. We're seeing that with USDAI, with Daylight, these private equity plays. Now, set aside the silliness of the banks asking to amend a law that they just supported and put stablecoin content into a bill about market structure. Nonetheless, the banks are influential. They might be able to get a few senators to agree. That could be enough to kill the bill. So he's saying there could be delays. But second, conflicts of interests. Some Dems have said that they won't vote for a market structure bill unless the bill has language that restricts the president's family from doing business in crypto. LOL. Third, in my view, the most important thing, DeFi, and this is the protections that we need because we've seen this with Tornado Cash. Let's be clear. Market structure legislation is about centralized platforms that exercise custody and control over user funds and transactions. The only thing this bill should do with DeFi is to protect it. This is how the regulators have tried to kill crypto so aggressive by saying that these intermediary lists, these protocols that operate by allowing a user to sign their own transaction because they have sovereignty over their own money, they're trying to apply middleman rules. But in blockchain, there is no middleman. It's all operated. It's don't trust, verify. You can look at the code yourself. You can see if I click the sign button, is it going to execute the way I want it to? And the fact is, yes, the blockchains will do exactly what they're programmed to. But the entire regulatory regime around finance is built on intermediaries, is built on those people that escrow funds in the middle, that supply loans, and they all take a little chunk of your money. DeFi solves all of this. So they've tried to break it down by saying, hey, if you're running a node at home on Ethereum that happens to transact alone on Aave, well, maybe you're one of these middlemen, and that would be very destructive. It would go after the developers. And remember, the Roman Storm trial is about code being free speech. We're in this conundrum of a space where citizens can utilize their free speech by writing code, right? Just putting words and math together. But then other users can go and execute that code, and that code might do something that previous laws are built to restrict, or something that goes directly against how traditional finance operates. And again, we don't need a lot of that regulation because it can be encoded. So this is really, really important. But sadly, but not surprising, TradFi disagrees. Some TradFi incumbents have been pushing Congress to save their regulatory moat by treating pretty much everyone in crypto as an intermediary, developers, validators, you name it. And they come back to Citadel, who is now asking Congress to sort of look at crypto and all of the crypto participants, which could be an at-home validator, it could be you, and apply sort of the Gensler rules. But Citadel makes their money by doing just this thing. So it's no surprise. The DeFi issue is the most important because the stakes are so high. Remember when OFAC made Tornado Cash illegal? Remember when the Department of Justice decided to put developers in prison? When the SEC said decentralized exchange developers had to centralize their protocols in order to come in and register? Never again. And dope, Jake. Hell yes. There's no market structure bill without developer protections because there is no crypto without developer protections. Hopefully the whole industry will hold this line, even and especially centralized crypto companies dying to do a bill. On this, no room for compromise. So all of this is coming together, and you can see why it's so important. It touches everything from the development of these protocols to the way that they execute to the way that they touch these major funding partners like pension funds, like banks, so on and so forth. This is how we get society in line with the crypto revolution that is coming. We went into financial nihilism via the meme coins, which were a direct response to Gary Gensler. He said there could be no real value in the middle of these things because if that value was shared, well, then it was a security. So the meme coins came out and they said, there's no value here. They're fucking memes. They're worthless. And yet people gambled and speculated on them until the real mission of sovereignty, of freedom just disappeared and everyone came out depressed. That is probably one of the core reasons for the negatively performing markets right now, is that you have this nihilism throughout the entire industry. People who have been here for so many years are saying, it's tough to continue if it's all just going to be memes. But when we get this regulation, when we get these rules in place, we can begin to connect the dots. And don't forget, this tech has been building for 15 years. So some of those dots are very ready to be connected, as we can see through Aave app, which now took away all of the crypto components of DeFi and just says deposit $100 and earn yield. It's all crypto underneath, but nobody knows that. Same with Polymarket. When you put money onto Polymarket, that shit's on chain, but you don't know that. It feels like a normal financial experience. And this is how we get to adoption. This is how we get to healthier Bitcoin prices. This is how we get to a healthier market overall. So it is exciting, guys. I'm trying to push through the narrative that the regulation is at the core of this. You have to get into law. And one of the things that attracted me to crypto in the first place was the mathematics, was the game theory, was the developer education, was the legal theory. Nobody, even experts in each of these fields, understood the other fields. So we're now merging all of this information together in this new world order. And hell, if we can get a nice, clean bill that just tells us how to operate, well, then it's carte blanche to go and build amazing things. And with that, I leave you with some hope on Friday. Again, don't over lever because we went down this morning because longs got wiped out and they're really just manipulating you. This is just centralized players that can sell assets or buy assets with enough force to liquidate people and collect their money. So stay safe. Have a great weekend. I'll see you on Monday. And please give me a like and a sub because knowing that you're watching keeps me going. Have a great one. I'll talk to you later.